Good morning, ladies and gentlemen. This is Greg Mikulowski from FXDD, and this is the Monday, March 22nd, 2010 New York for Morning Forex Report. Let me remind everybody that trading Forex is risky and should only be done with risk capital, not change your lifestyle. Traders could lose all the risk capital trading Forex. FXDD does not guarantee the recommendations made within its commentary. Traders should make market assessments to take trading positions based on their own personal market analysis, risk tolerance, and financial condition. In addition, care should be made to only use leverage which is congruent with your personal risk tolerance. Although care was taken in creating this report, FXDD does not guarantee the accuracy of the information. Well, today, Monday, going into New York session, we only have one economic piece of data coming out at 8:30. That would be the Chicago Fed National Activity Index. Last month it came in at zero point 0.2. There is no estimate for its expectations here today. It was minus 0.58 in December and plus zero point 0.6 in November. So it goes up and down here over the last 4 months. It's been negative plus, and today we'll see how it all pans out. So that's very little as far as economic data overnight. The euro, the big concern is the Greece troubles. The market is waiting on the EU summit. There is some division within political arena. France is for economic aid for the debt crisis in Greece, and Merkel from Germany, she continues to be a supporter of Greece. Get your own act together, get your debt situation in order, just like the rest of us. Sterling weakened on political concerns as well, and also there was a Confederation of British Industry survey that does suggest that the growth may continue to be light this week. On Wednesday, we do have Alistair Darling's budget, which will come out again on Wednesday. The markets will be very much interested in that because he's caught between a rock and a hard place for supporting his party, which is losing ground and keeping the economy going without increasing the amount of debt. So that's going to be a problem. The Swiss franc, the Swiss National Bank, talking about stopping excessive risk in their currency, or excessive moves in their currency. That would be to the upside. So Euro Swiss kind of paused, and some of the commodity currencies are suffering on the back of the surprising interest rate raise that we saw last week. So let's go into our charts and see how we stand in regards to some of our currency pairs. So take a look at the euro versus the US dollar. We have an hourly chart here, and you can see how the market closed on Friday at the 135.36 level. Currently the market's trading 135.31, so right around the market close level from last week. I always like to look at that, especially on a Monday, to see what the bias is for the currency in regard to the prior week's close. We have this line in here at 135.13. That was a support level going back to the last time the market was down this low, and the market did dip down below it, making new lows here today for the currency pair, all the way down to 134.98 before bouncing back higher now over the last couple hours, where I've been using this 135.13 level as a support. I'm going to zoom in there, and so that's going to be a key level that we're going to be watching here this morning. Look for support at the 135.13 level. You can see that we did have a lot of support there over the last few days. Even though the market has dipped below that level, I think that it's going to be important in the last couple hours. The fact that the market held that level may suggest that we have further move to the upside here for the currency pair. 135.86 would be a nice target on the upside. First have to get through the high for the day at 135.46. Let's take a look at the 5-minute chart. We are also about, here's our 135.13 line. Maybe you want to put that in your chart. You can see how the market came down, tested that after this, well, volatile move up and then back down here, back to the 13 level. But this is encouraging right here, I think, for the day, and a nice level here. The other thing that of note is how the market came down, tested the 200 bar moving average here, down here, which is positive for the euro versus US dollar. So that level comes in around the 135.20, 122 level currently at the moment. So that could also be a stop level for anyone's trading. If they want to go long, use that as a stop On the top side, off this 5-minute chart, I see an old trend line coming in that it's kind of a parallel line going all the way back to that period right there, and that current trend line comes in at 135.43, and the high for the day came in at 135.47 or something like that. So look for that resistance on the top side. I mentioned that the pound sterling was weak, and then but it has since rallied. We did close on Friday at the 150.15 level. Currently priced 150.0201. So we are trying to move its way back to the top side here for the sterling versus U.S. dollar. We did reach a new low, 149.30, but that does stays above this low that we saw earlier in March. The low for the current month at 148.71. So those are support levels. Now is the old low, and for today, and the old low from March 10th. Taking a look at the 5-minute chart, of significance here is boom, staying below the 100, staying below the 200, staying below the 100, boom, 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 back above. This is suggesting, a consolidation and/or corrective type phrase here for the sterling versus the U.S. dollar. The fact we're back above the 200 bar moving average is a positive, and so we'll be watching perhaps the upside for this currency pair here today. The 200 bar moving average comes in at 149.87, so use that as support. Also, the 100 bar moving average comes in at 149.70. That will be another support level as long as the price can remain above these two moving averages. Perhaps a move toward the 150.53 level might be in order. Also toward the close of, go toward the first level as a close of Friday. Again, that close of Friday did come in at the 150.15 level, so that would be an upside objective for the sterling versus U.S. dollar. I mentioned that in the Swiss franc, we did see a bounce off of the comments from the Swiss National Bank. We are kind of in between our goalposts here. Went down, tested the 100-hour moving average at 150.73 earlier, and then we're at 160.17 for the 200-hour moving average. Currently, the price is right at that 160.17 level. So as New York enters, we have a choice whether the market is going to move to the upside here. If we break out, we should see a further break to the upside or come back to the downside where might be a target. Well, we can look at this 50% retracement at 160.55. This is of this current move down from this high to this low here. The midpoint of that comes in at 160.55. That would be a target on the top side, but currently right now 160.19 is going to be a key level for the sterling dollar versus Swiss. On a 5-minute chart, we kind of see the opposite of the euro, where the euro went up and then down. Now we're seeing that the dollar Swiss moved down and then up. So the 100 and the 200 bar moving average on this chart, you can see how the two moving averages, especially the 100 bar moving average, kind of staying steady here at the about 160.0708 type level there. That will be our support level on the downside. Again, we're at 160.19. Break above 160.19. You can put on the line in there at 160.19 area. Doop, boop, boop. Didn't mean to put an arrow line, but if we break above that level, we should see a move to the upside here for the dollar versus Swiss. Take a look at the might as well take a look at the Euro Swiss to see how that too is bouncing off here, the bottom for that currency pair with 140.05 as a key level, 144.05 as a key level on the top side. Currently trading at 143.61. We'll see, but it does look like maybe perhaps the bottom is in place for that currency pair. Dollar yen first on the daily chart. We're going to look at the daily chart. Look at the 100-day moving average at 90.06 here today. The low, very narrow range here today with the low at 90.40, the high at 90.76. So quite a narrow range for that currency pair. We do also remain above the 100 and 200 bar moving average here on this chart. The 200 bar comes in at 90.43. The 100 bar comes in at 90.40. When those two moving averages and the price converge, you look for a move in a direction. So right now we're holding the support against the 200. So it looks like the likelihood is for a move to the top side. We're going to have to get through this 72 level, and you can see that the market tried once again. How many times? 72. Look over the times around the 72 level. We got a little above it here. We got a little above it here at 76, but the market still came down. We got to show momentum above the 72. If we don't show momentum above the 72, then the sellers are just going to come in and take their profit. I mentioned there's some pressure in the currency pairs, and we are seeing the dollar Canada try to get above above the 200 bar moving average here as we start the day. 101.80, currently trading at 101.81. You have to go back a long ways. In fact, at the beginning of the month to see the last time the market traded above the 200 bar moving average. So a move above that moving average would be a significant. Actually, that's what does this go back to? Yeah, March 1st. March 1st above the 200 bar moving average is also the 50% retracement would be significant, and we could or should see a further move to the upside for that currency pair. I'm going to move this back to something a little bit more that makes sense. 61.8% comes in at 102.21 of this little tiny move. If I move this further up toward the top here, 38.2% comes in at 102.91. Finally, take a quick look at the dollar. Aussie versus U.S. dollar getting broke through the 200 bar moving average on Friday and continue that trend to the downside here. Next support at 90.94 for that currency pair, and then 90.78. Thank you very much. This is Greg Mikulowski. Have a great day trading.